So, how did I make $1,110 with Maxon? So, starting off with Maxon, I got into Maxon calls on July 5th at 15:49. So, 15:49, 15:49. Let's look. So, this candle right here, right? I got onto Maxon at with sorry, this candle right here. So, I got into Maxon on this candle, right? And due to my reasoning of why I got into this candle was because how you see this pattern on the chart right now, right? Uh, you see the 200, first you see at the very bottom the 200, the 180, and then following is the 50, then the 20, then the 9-day moving average, right? And usually when that happens, or when that pattern shows up, that usually means that stock is gonna probably continue towards the uptrend in the future or in the upcoming days, right? And so basically, I got into this candle at 15:45, right? So I saw the opportunity. As soon as I saw that it touched the 50-day moving average, I got in, and that's when I saw that Maxon dipped, right? I didn't worry because I was like, usually this pattern, this pattern never fails, right? And so, following the next day, which is, or not the next day really, but Monday, which is today, Maxon opened around 0.29, 0.30. It touched, the high was 0.30, right? And then you can see throughout the day, it reached 0.34, right? But I sold out at the very opening of the market, and that's how I made $1,110 with Maxon. Let me see, what time did I sell Maxon at? 9:31. So literally in a minute, I sold out of Maxon as soon as I saw I was in the green. And yeah, that's pretty much it. How that trade went. And the reason I got into that trade was because there's this website called barchart.com, right? And I looked up the highest implied volatility options, right? And usually this is like a website that tells you the options with the highest IV, right? And so I looked, right, at the very first option, or yeah, the first option, right, that was on the list with the highest IV was Maxon, and it said calls, right, with a strike price of 0.50, and then it told me the expiration date to buy, right? And so looking into that, that's looking at that information, I used it to my advantage, right? And I was like, well, hopefully, not it was it's not hopefully, right? But I was like, using this data, right? This can imply that, a lot of people are expecting a huge upwards I guess they're expecting a huge move. That's what I want to say, right? A lot of people are expecting a huge move of Maxon, right, to happen. And so on Friday, I looked at this website. Maxon appeared. Beside it appeared a call option, right? And then it showed me the strike to buy, the expiration date to buy in, right? And then I looked at the IV that it had, right? I bought in, right? And so when I had saw that Maxon had touched the 50-day moving average, I quickly got in. So because I knew that, Maxon is, the people that are investing or buying that option right now are expecting a huge move to the upside. And so that did happen this morning, right? And obviously right now Max in uh what is it? Well, not this, right? But Max in right now finished at 0.27, and right now I'm in Max in puts, and it's till what is it? September 20th. And I do expect, for Maxon to, what is it? Probably fall a little bit more due to the fact that right now this is after hours. This is after hours, but right now it's under the 180 200-day moving average, right? On the 5-minute time chart. And who knows if, Maxon could skyrocket, but um, we will see tomorrow. We will see. But that is how I traded Maxon. And then the next stock that I traded was, let me see, Disney. When did I get in? Oh, okay. So I traded Disney around 1341. 1341, let's see. And I used the 30-minute time chart on this trade. So this candle right here, right? As soon as I saw that Disney was approaching the 9-day moving average, I bought into puts, and I bought puts because seeing the previous candles getting rejected, well, these two candles specifically, the 10-hour candle and then the 10-30-hour candle got rejected by the 9-day moving average, right? And so, and then most of the day it was under the 9-day moving average. You can see this candle too. The 13-hour candle got rejected by the 9-day moving average. Using that information, I got into this candle, the 14-hour candle, right? I got in, it touched the 9-day moving average, but it broke through. But I bought a long-term call option, right? That way my loss wouldn't be that much of a big loss, right? And so, as soon as I saw that the position was down 5%, I sold out because I was like, you know, last week I wanted to be a little risky, right? And I wanted to show you guys that, playing options with no goal set in mind is risky. And so I played it safe, right? And so as soon as I saw that, Disney was down, well, my position was down 5%, I sold out. And I sold out at 1410, losing $126 with Disney. I traded Square, but it really wasn't that much movement, so I just left out and I made $0 with Square, right? And so the next trade is Amazon, right? So at 7-8, oh well, today, right? So at 1424, let's see, 1424. Let's see. So this candle right here, right? What did I get in? I'm sorry. What did I get in? Calls, right? Okay, yeah, calls. 1424. 1424. I'm sorry. Okay. So this candle right here, right? 1424. I got in this candle, right? Because as soon as I saw that how you see this pattern show up on the screen, right? As long as you know, the 9, 20, and 50-day moving average are above the 180 and the 200-day moving average, somehow this I've only tested it only a couple times this strategy, right? Most of the times the stock that looks like this with the moving averages on the screen usually makes a comeback somewhat towards the end of the day, if not in the middle of the day, right? And so, as soon as I saw that, okay, it broke through all these moving averages, right? But the only last opportunity that Amazon could do is jump off the 180-day moving average, right? And so basically, I got in as soon as it touched the 180-day moving average. And when that happened, I sold out at, when was it? I'm sorry if looks like I'm flicking you off, but I'm not. I sold out at 1451. So 1451. This trade was a little longer, right? But I was just waiting for confirmation. And I basically waited for confirmation that okay, if Amazon goes up 5%, cool, right? But if Amazon decides to break the 180-day moving average, I'm out, right? And so I sold out at, I'm sorry, what am I doing? I sold out at 1451 and I made a gain of $160 with Amazon. And so the last trade of the day that I did with Apple, the last trade I did was Apple. And so basically at 1311 I got in with puts. Puts 1311. Let's look at Apple. Let's see. Okay, so this candle right here, right? As soon as I saw that Apple was having trouble going past the 20-day moving average, I basically got into puts, right? And I waited for my position to go up 5%. And in a couple of minutes, it did go up 5%. And I sold out as soon as possible out of Apple, right? And then you can see that the next candle had trouble breaking the 20-day moving average until finally this candle at 1430 it broke above the 20-day moving average, and then you can see Apple regained to you know it basically went up. It finished up in the green for the day, right? And so that's why I'm telling you that usually when the chart looks like this, right, when the 9 and the 20 and the 50-day moving average are above the 180 and the 200-day moving average, usually that stock will end up in the green. Or let's say you got into a bad spot, right? It will usually it will end up being green or finishing green. Or if not, it will slightly go up in a upward trend. And usually, and yeah, basically that's what happened with Apple. But that is how I made $182 with Apple. So that's pretty much it. That's how trading went today, right? Um, you know, last week was a little crazy, right? I did break the rules, right? But I wanted to test out a strategy, see if it worked. It obviously didn't work, right? Over trading in a way is not good. It's not good because you're trading multiple stocks at the same time. Meanwhile, you should be focusing on one trade at a time. And so, you know, this week I was like, I'm gonna just go back to how I was doing it normally, and hopefully that loss that happened with last week can re be can be recouped this week. We'll see, right? And like I said, I'm testing out this strategy using the high IV option strategy. Basically, use it to my advantage using that data that that the website gives you, barchart.com. And if you need to look the highest implied volatility options, just click here where it's press on go to, and then press on highest implied volatility. But yeah, that's pretty much it. Hopefully you guys did well paper trading or real trading, or maybe you guys invested into the stock market a little bit. Maybe you guys found some good deals out there, right? And yeah, that's pretty much it. Uh, Probably the last thing I want to talk about is uh, Bitcoin. Right now, you can see that Bitcoin is struggling a little bit. It tried. No, well, no. I mean, it's right now. It's below all the moving averages. So we will see what happens with Bitcoin. But I feel like right now, uh, possibly Bitcoin could crash a little further down, possibly to the 47,000 range. But we will see. But yeah, that's pretty much it. Hopefully, you guys have a good night, a good day whenever you're seeing this. And as always, take care, and I'll see you in the next video. All right, take care, guys. Bye.